Okay, thank you. Thanks, Simon. Okay, as Simon was saying there, if anyone does have any questions as I'm going through this, please feel free to ask. If it's anything relevant to a particular slide I'm on, if it's a more general question about Bitcoin and other cryptocurrencies, which I will be touching on as well, then I'll try and reserve a little bit of time at the end. So we've got about 45 minutes, so we'll get going with it. Just before I run into it, like I said, I've got a lot to cover. I just need to share this quick disclaimer and risk warning. This is basically saying that this shouldn't be taken as investment advice, and the things I say on this presentation, and this is purely my personal view. Also, just attract you to the final sentence or final two sentences on this risk warning. Trading CFDs based on cryptocurrencies, that's what XTB offer, a CFD on the cryptocurrency, is extremely risky due to significant volatility and also the use of leverage, and losses can exceed deposits. Okay, so I'll just give you a sort of overall view of what I'll talk about. First off, I'll go through a fairly brief introduction on cryptocurrencies. I'll be focusing mainly on Bitcoin. I'll then be talking about the rise of Bitcoin. As Simon said at the top there, we've seen an incredible rise. I think it's up over 300% this year. Bitcoin from around $1,000 per Bitcoin to excess of 4,000. It's made its all-time high just last week. And I'll also be mentioning a few others cryptocurrencies that we do offer at XTB. I'll then be talking about how you can trade them with examples of trades I've placed myself on a demo account in the past couple of weeks here at XTB. Just some screenshots show you how you can enter positions, exit positions, and manage those positions whilst you're in the trade. And then finally, I'll just use some historical comparisons with the sort of bubble that we've seen when we've had this huge rise higher in prices, and then like I said, make some analogies with previous times where we've seen bubbles. So first off, what is a cryptocurrency? A cryptocurrency, a formal definition, is it's simply a digital currency that uses encryption techniques to regulate the generation of units of a currency and verify the transfer of funds. Now, breaking this down, what that means is if you take a typical traditional currency, let's say the pound, for instance, the generation of units of the pound are controlled by the Bank of England. The Bank of England have several measures that they can use to control the supply of pounds in the economy. In terms of verifying the transfer of funds, there you'd normally have an individual retail bank. So if you were to transfer funds, if I was to transfer funds now to Simon or someone else on this webinar, I'd place that order, if you will, with my bank. They'd take the money out of my account and they'd transfer that to another person's account. So that's traditionally controlled by third parties. When it comes to cryptocurrencies, there isn't actually these third parties involved. There's an encryption technique on something that's called the blockchain, which I'll go into in more detail later, which essentially cuts out this middleman. This in itself is probably seen as the most desirable attribute of cryptocurrencies, in that bypassing this middleman should, in theory, make the transfer of funds, one, quicker, and also two, cheaper, because you're not having to pay the middleman for their service. As I said, Bitcoin is the most well-known, I think, for cryptocurrencies. It was invented anonymously in 2009, and its inventor calls it a peer-to-peer electronic cash system. So to say again, this is taking out the third party. It's just simply peer-to-peer, one person to one person, one entity to another entity. In terms of how you can sort of conceptualize a cryptocurrency, I think you can view it the same as any other currency. So whether that's the pound, euro, US dollar, Japanese yen. And the cryptocurrency itself doesn't have an absolute value. It obviously has a relative value, like all currencies. So when you talk about the price of something, when I'm saying Bitcoin has risen from $1,000 to over $4,000, that's Bitcoin, that's US dollars per Bitcoin. You can also have it quoted in other currencies. You could have pounds per Bitcoin, euros, Bitcoin, etc., etc. So straight away, I'll just show the instruments that are on offer with XTB if you choose to trade cryptocurrencies with us. We offer 5 instruments at the moment. The instruments we offer are CFDs on the cryptocurrencies, and I'll come back to this in a minute. I'll explain what a CFD is just in case anyone doesn't know and what difference this is. The difference is between speculating for a CFD and owning the underlying asset. What you are enabled to do with a CFD is to use leverage. So we offer up to 20-to-1 leverage. The market's currently open 24 hours a day from Sunday at 10 p.m. to Friday at 9 p.m. British summertime. So that is the same as the FX markets that we offer. I've just literally this morning actually been speaking to my boss, and he says we're going to be extending these hours in the coming weeks, possibly coming months, so they'll actually trade 24/7. At the minute, the markets close over the weekend that we offer, but soon they will be trading right through the weekend, so 24/7 you can trade these markets. So there's 5 coins that we have on offer, or cryptocurrencies I should say: Bitcoin, BTC, USD, Ethereum, Ripple, Litecoin and Dashcoin. You'll notice all of these are against the US dollar, as US dollar is the most widely traded currency, and these are all the ticker symbols that you'd use if you want to trade these through our XStation platform. So the rise of Bitcoin. As I said earlier, it was created anonymously 8 years ago now, and it's widely seen as a market leader for cryptocurrencies. Last week it hit an all-time high of $4,465 per Bitcoin, which gives a total market value of approximately 70 billion US dollars. Here I've just got a chart to sort of briefly try and chronicle the rise of Bitcoin that we've seen. And this is taking the year-on-year rise from one June the 9th to the next June the 9th. June the 9th itself doesn't have any particularly special date. It was just a date we chose, which was shortly before we began offering cryptocurrencies. So just over 2 months ago, we started to first offer instruments on cryptocurrencies, and we calculated going back the year-on-year rise. So the first one is the year rise from June 9th, 2012 to June 9th, 2013. You can see then we had an incredible 1,929%. We had a big rise in 2014. 2015 was the biggest down year, or the only down year in this sample set. But that's a very big down year, really. 64% decline is huge. And then since then, we've had huge rises last year up until June 9th this year. And since June 9th, we've gone up another, I think, 46% approximately. That may be slightly higher. I know the market's risen in the last couple of days, so it may be getting on for 50% now. So you can see straight away it's a very volatile asset. You can also probably see, without the aid of a chart, this is an uptrend, but I'll show you now just as graphically. So this is one of the candlestick charts we have on our XStation platform I took just earlier today. You can see this is on the top left, BTC USD, on a monthly candlestick. So each candle here represents 1 month's worth of price action. And what I've done, just going back to this here, each of these points I've labeled 1 to 5. So you can see we've had each increase, and you can see how, whilst we did have percentage-wise large increases, particularly in the first year, in nominal terms, certainly we've had a much bigger increase so far in the past year or so. And you can see we've really took off, and we've almost exploded to the upside with sort of parabolic growth here. So this is why it's attracting a lot of attention. The market cap has rallied hugely. And yeah, it's attracted a lot of attention. Since we started offering these a couple of months ago, we've been getting lots of questions about these. We've been doing stuff in our trading clubs, which we host in an office here in Canary Wharf every other Thursday. And we also did a masterclass just last Saturday, which was very well received on cryptocurrency. So from what we gather, there's a huge interest, and I hope you guys listening are also interested in this sort of thing. So this latest surge, this last push up we've seen in the last 6-8 months or so, what are the main reasons for it? I've just highlighted 3 factors. There's obviously many more things at play here, but these are 3 of the biggest factors, I believe, in this latest rise. The first one is down to a Bitcoin upgrade. So basically, there was a dispute within the Bitcoin community which had threatened to see to sort of split the currency in 2. Essentially, the processing power of Bitcoin wasn't able to keep up with the surging demand, and what it meant was that carrying out transactions was, 1, very slow, and 2, also quite expensive, because of such a surge of demand to actually trade through Bitcoin. So the Bitcoin community, who are basically a group of the developers and the miners who create Bitcoin, decided to have what's called a hard fork at the end of July 31st. So what they created was Bitcoin Cash. Bitcoin Cash is an alternative to Bitcoin, which has greater processing power, essentially. So it can allow more funds to travel through more quickly, and it doesn't have the same sort of bottleneck that we experienced in Bitcoin. So this latest rise in Bitcoin happened really because this fork passed without a big incident. There was a bit of fear. I'll show you some more charts detailing this more closely later. But there was a sort of fear that everyone, or a lot of people, would start to ditch the original Bitcoin and move to Bitcoin Cash. This hasn't actually happened since the split. Bitcoin Cash itself has been rising. It's trading around $800 last time I checked. But the original Bitcoin still has very solid demand for it. So kind of the aversion of this possibly massive disruption has actually been seen as positive. And perhaps people who were skeptical before the fork, who'd exited their Bitcoin holdings, have since rushed back in and pushed price back up higher again. The second reason is Japanese demand. Japan is probably the leading country, or certainly the leading developed country, in terms of Bitcoin support. So regulators in Japan have been very favorable towards Bitcoin. It's been legalized as a payment method earlier this year, and buying of Bitcoin in Japanese yen accounts for over 42%. You can see almost half of the buying we've seen in Bitcoin, according to Crypto Compare. I think that's in the past year, has actually come from Japan. So it's very popular in Japan. The third thing is institutional interest. So really up until now, it's largely been developers, miners and retail traders who've actually took an interest in Bitcoin. Lately, because it's getting a fairly substantial size, I'd say 70 billion market cap, it's actually starting to attract interest from institutions. If you think of the typical returns that institutions offer and the returns, say, on bonds, or if you look at the stock markets, they're being absolutely dwarfed by this rise in cryptocurrencies. And if the most smart, best financial minds in the world are only returning single digits, and then you're having retail guys who are buying Bitcoin and returning 1,000% a year, you can see why people were questioning why institutions aren't getting involved or taking a more proactive approach with cryptocurrencies. Institutional interest is still interest at the moment. I don't think there's many big, large-scale buying that we've seen into Bitcoin. But if we do start to get the big players, the hedge funds, possibly asset management, moving into cryptocurrencies, then we could really see an explosion in this market, and it could continue to rise significantly in the coming years. Okay, so just a few quick facts just to sort of show how impressive the rise of Bitcoin has been. Bitcoin's now surpassed the M1 money supply of the Philippines. The M1 is an economic term. It basically means the most readily available money, so it's cash and cash equivalents in a country. And Bitcoin's now gone ahead of the Philippines, sits in the top 50 in terms of global rankings. I think it's 46th in terms of its value as a currency. Another comparison, the total value of Bitcoin is now similar to the market cap of PayPal. This is particularly interesting because Bitcoin has actually now seen its market share of the cryptocurrency market fall. It has less than a 50% share of the cryptocurrency market, which essentially tells you that cryptocurrencies are now valued at more than double what is the leading online payment service. You can see already the valuations are very high in cryptocurrencies, and the expectations for further rises are very big as well. So here's a chart I took last week, just basically to show those 5 products that I said we offer and what their share of the cryptocurrency market is. So this orange line at the top, as you can see all the way along, is Bitcoin, and that has been going back to July 2013. You can see the clear market leader. We've had in excess of 90%, nearly quite a bit of the time, nearly always above 80%. But this year we've seen a major drop. We've seen a drop from around 85% down to where we currently sit, which is around 50%. What makes this all the more interesting is at the same time, we've seen the Bitcoin valuation go up by about 4-fold. So if we're getting Bitcoin valuation increased by 4-fold and it's almost halving its market share, you can see that the market cap of cryptocurrencies have gone up by 8-fold just this year. Some of the big rise has come in Ethereum. Ethereum was sitting on incredible returns of around 5,000%. It came from basically nowhere just a couple of years ago, and it now commands around 20%. It was over 30% of the crypto market not so long ago. And then you can also see Ripple had a big surge, that's fallen back, but in the past few days actually we've had another leg higher in Ripple, and Ripple now is moving up towards Ethereum. And then we have Litecoin and Dash, which are still very low valued coins relative to Bitcoin and the others. So why is Bitcoin so popular? So this is just trying to fairly simply go through how Bitcoin functions and why it's desirable. If you could sum it up in a word, why Bitcoin is so popular, I'd say it's probably the decentralization of it. As I was saying at the top, that means the elimination of a middleman or the third party. So the decentralization allows 5 key factors really, which aid the popularity and desirability of Bitcoin. So first off, security. The information about transactions is recorded in the blockchain. Bitcoin itself is very secure. There is some areas around Bitcoin which haven't been so secure, which I'll come on to later. But the blockchain is simply an online ledger which basically records every transaction on Bitcoin. This is the real innovation in cryptocurrencies, I believe, and this is where the key value lies. And even if cryptocurrencies themselves do turn out to be a bubble, as I'll allude that they possibly could later on, I think the blockchain innovation itself could actually be a very lasting and key innovation which will change many different aspects of business. So decentralization also allows higher speed in theory. Again, cuts out the third party, all transactions are online, and also this means it should be theoretically lower cost. As I said, Bitcoin's had some issues lately where it hasn't actually been cheaper to transfer funds through Bitcoin or faster. But in theory, if they get running to an optimal level, they should be far quicker and cheaper to transfer money than it is currently with a money exchange such as Western Union or through your bank. One of the most popular traits is also anonymity. So the owners of Bitcoin, or any owner of Bitcoin, whilst there's this blockchain and an online ledger, and you can see who owns the Bitcoin, this is still anonymous. So it's basically a username and a code. So there's no addresses, proof of identity, these sort of things attached to Bitcoin. What this means is it's very popular in the shadow economy in terms of drug trafficking, racketeering sort of jobs, and sort of criminal underworld, and also online gambling. It's been very popular because you can essentially transfer large sums of money in an anonymous way, and you can't find the true identity of where that money's gone. From an economic perspective, I think the final point here is probably the most desirable, one of the key reasons that explains the huge rise we've seen, and that's that there is a finite supply. There's currently around 16.5 million Bitcoin in circulation, and it's estimated this will max out approximately 21 million Bitcoins when they're finally all created around 2140. I'll come on to this later when I talk about mining Bitcoins. But what this means essentially is if there's a finite supply and you're getting an increase in demand, obviously in basic economics, this is going to push up the price. If you look at a lot of traditional currencies, since the last financial crisis, there's been quantitative easing methods used from the Bank of Japan, Bank of England, the Fed, the ECB, and essentially what this has done is increase the money supply. When you increase the money supply, assuming demand stays constant, that forces price down lower. So the fact that it is a finite supply and there's not a third party that can interfere with this and increase supply is one of the key economic aspects for why we've seen the rise in price. Okay, so how can you trade cryptocurrencies? Hopefully now I've got enough attention where you may be thinking you'd like to trade and speculate on cryptocurrencies, and there's 3 ways you can do this. First off is the original way, which is mining. To mine a Bitcoin, what you basically need to do is to solve a complex computational program. Originally, when you did this back in 2009, you received a reward of 50 Bitcoins, but since dropped the reward that each miner gets. So I think it's currently 12.5 Bitcoins if you manage to finally solve this program. It's a mathematical puzzle basically which you're trying to solve, And if you do solve the code, it has an evolutionary nature. So that means the next person to try to solve it, the code is even harder. This is why the amount of Bitcoin will max out at around 21 million, because it will come to a point where theoretically it's nearly impossible to solve the code and it'll take so long to do. Originally, when people first started mining Bitcoins, they were churning out tens of Bitcoins and cracking the code several times in a minute with just an ordinary household computer. Now you can have very high-powered computers and even pooling of computers amongst many people and very expert computer programmers, and it's still taking days and days to mine. So essentially, unless you have a very specialized knowledge of programming and the advanced computer hardware, which itself is very expensive, it's pretty much unattainable for the vast majority to mine Bitcoin anymore. So the most popular way, if you assume mining is ruled out, is to buy through an exchange, so crypto exchange. Anyone can create a cryptocurrency account and buy a cryptocurrency online. There's the most popular, as I say, there are two real drawbacks to this approach. So firstly, the funds are in the exchange account and not in your own account, so it's not a segregated account. Whilst Bitcoin itself is extremely secure because of the blockchain, the exchanges aren't, and hackers have previously stolen large amounts of Bitcoin. Mt. Gox was the largest Bitcoin exchange at the time. When it was hacked in February 2014, 850,000 Bitcoins were stolen or disappeared. At the time, that was valued 450 million. As you can see, a Bitcoin then was about $500. Obviously, since then, we've had this increase in the price of Bitcoin, and whilst 200,000 were eventually retrieved, there's still 650,000 missing, which would account for roughly 2 billion. The second drawback kind of seems like a funny one, but if you forget your login details, you can't actually get back in to the Bitcoin. So you hear some horror stories of people who've bought Bitcoin 4 or 5 years ago and forgot their login details, and there's no way they can get back to access their currency, even though it's gone up so many fold, because it's so secure. The third one is CFDs, and this is obviously what we offer here at XTB. A CFD is a contract for difference, which allows you to take a position on the price of the market. You don't actually own the underlying asset, so you're speculating if the price will go higher or lower. There's key attributes to CFDs. The first three here are related to CFDs in general. The bottom three are more specific to XTB. So the first one, and a huge advantage I believe, is that you can take long and short positions. So you can't normally, through mining or through buying from an exchange, you can only gain long exposures. You can only buy coins. If you think something's overvalued and you want to sell it, you can also do that for a CFD. So you can profit from both a rise and a fall in prices. The second one is lower cost. There's no commissions or dealing costs that are associated with physical trading of Bitcoin. The third one is leverage. So leverage, whilst I would say it is an advantage if used correctly, can be a disadvantage if used the wrong way. What leverage essentially does is it magnifies your profits and losses, and it allows you to gain greater exposure than the money you have down as a deposit. I'll come through some examples explaining how leverage works later, and how that can impact your speculating or your trading of cryptocurrencies. For XTB, a big plus, I believe, is the ease of opening an account. If you just go on our website, there's a tab saying open an account, and we've recently been doing an internal trading competition, actually, just so we all went through the process of account opening, and we found that I found that within 10 minutes of applying for the account and providing the right details, proof of identity, proof of address, I had an account open and it could be funded within 10 minutes. So it's very quick and easy to open an account with us. We're FCA regulated. A lot of crypto exchanges aren't. They're essentially seen as offshore. The retail client funds are held in a fully segregated account. You won't have those incidents like you did with Mt. Gox, where someone can essentially steal Bitcoin. And finally, we're covered under the Financial Services Compensation Scheme, so deposits up to 50,000. If something, in an extremely unlikely event, untoward were to happen to XTB, you'd be protected up to that amount. Okay, so I'm just going to talk you through how you would go about entering a trade if you wanted to now speculate on any of the currencies. This is a screenshot of our platform XStation, and you can see here on the left-hand side there's this BTC USD ticker. And what I've circled here is the trade ticket. So if you click on the trade ticket there, then it will open it up. And whilst you don't always need to open a trade ticket to enter and exit trades, certainly if you're new to the platform, I'd recommend doing it, because you can calculate your margin, your exposure and things like this far more easily for a trade ticket. After you've done 10, 20, 30, 40 trades, you start to know the level of exposure you have, the funds required to enter. But certainly at first, I think it's wise to go through these trade tickets. So if you click on the trade ticket like this, it'll pop up. See the volume there is 10. So for 10 Bitcoin, you'd need a margin of £1,667. Going off current exchange rates for the dollar, that's say approximately $2,000. And you can see that's only 5% of what 10 Bitcoins would cost if you were to buy them outright as physical, which would be around approximately $40,000 US dollars. Talking you through other things that are important, the pip value here. The pip value is basically how much your position moves per pip that the market will move. And if you were to enter a trade of 10 lots, then you'd have 0.08 pounds per pip. That's, again, essentially around 10 US cents a pip. One thing with trading with CFDs, I'd always recommend having a stop loss. This is just to protect you in case the market moves against you. You can see here at the time when I had this ticket open, the buy price was 4,309. I've just chosen it as an example. If we get 10,000 pips, which is 1,000 US dollars, below, the stop loss would come in at 4,209. So that's 4,309 to 4,209. If you were to enter this trade on 10 lots, then if your stop loss is hit, you lose £775, which at the time I calculated was 2.26% of my account. I think it's very important if you do trade CFDs to know your exposure and know your stop losses before you enter any trades, and have those crystal clear in your mind. So here's a trade I entered a couple of weeks ago. Let's say this was on a demo account. I'm not going to sit here and say I'm a massive guru or an oracle at trading Bitcoin and I always buy the bottom and always sell the top and I see it perfectly. Just show you some examples how you can have a sort of systematic approach to trading these markets. So as you can see here, we had a big resistance level just below 3,000 where we peaked in June. We came back again around the end of July. We were forming a possible sort of triple top, and then we had this big move higher over the weekend. When markets open on Sunday night, we'd gone up to around 3,255. So this is a daily chart of Bitcoin candles. Going into a shorter time frame, you can see we've opened up here. This is what happened on a Sunday evening, and then I was looking straight away. I thought this is a big break high. I'm looking for a buy signal somewhere I can buy this market. We then hit into this resistance around 3,255. We pulled back overnight during the Asian session when I was asleep and not watching. And in the morning around 10 o'clock, we breached this 3,255, and I took that as my entry signal to jump in on a long position. Just showing that again and a little bit more zoomed in. Here's the level I was looking for. I was looking for a break off this level to show we were possibly trying to do another leg higher. And here I entered the market long once we breached 3,255. And in terms of stop loss, what I used is something called the last candle rule. So this is 30-minute candles now, and the candle that broke through, I wanted to have a stop loss below the low of that candle. So the low of the candle was about 3,245, but I didn't want to get too tight on it, so I went 3,242 as a stop loss. Now, this is a screenshot from the bottom of your XStation platform, which basically shows how you can manage your positions. You can see here, BTC USD, bought 10 lots, the time I opened the trade, what the opening price was, and then my stop loss here, 3,242. As I enter 3,242 here, it tells me how many pips that would be in terms of losing if it was to come down to it, and also what this would be pound-wise and damage to my account if I do get stopped out, £245. You can see this was the moment I bought the market, and you can see we broke up through 3,255, and the market really took off. It was a lovely trade that just worked for me straight away. As I say, I'm not going to sit here and pretend that every trade I do is always a winner, but if you do follow a systematic approach, this is how you can basically minimize your risk while looking to take advantage of these opportunities. We then had a similar pattern again to what we had before, so you recognize this hopefully from previously, where we peaked around 3,405, we pulled back and we moved again back up through 3,405. Now at this point you could, if you're an aggressive trader, add to the trade, but I decided to take this as a signal to possibly move my stop in and guarantee some profit. Further on, as this trade developed, we went up to here, we pulled back, and then we got a buy on this 3,405. This is a really nice example of what I call the flipping polarity, where you have an area that's previously resistance, and then once you break the resistance, it can then act as support. This isn't certain and set in stone, but once I've seen price support my idea that this could be support, I decided to advance my stop in to make sure that I took some profit from the trade in the worst case scenario. I could, of course, have just closed my trade and banked it here, but I was hoping to let it run even further to my side. As you can see here, I moved my stop into 3,401. Just going back there, it's just a few dollars below this low here. And what that means is for my entry at 3,274, the stop loss 3,401, that would equate to a worst case scenario of £970 profit. You can see on the right hand side at the time I was running a profit around 1,400, but like I said, I was trying to let this run and give me more upside if it would. Unfortunately, after we'd had this support here, the market went higher, made another high, pulled back and tested support and held again, which showed further that I believed my stop loss was in the right place. Then we had this big ugly candlestick which popped back down, smashed through there and hit my stop loss. So that exited the trade for me and then put me back to flat in terms of Bitcoin exposure. Here's just a quick summary of my trade. You can see that. You can see the open time, the close time, the open price, the close price, also the profit on the right side, about £960. So that's just a quick example of how you can make these trades. And the nice thing about that, as you remember, if we go back all the way to the top just quickly, is as I entered the trade with my stop loss, I was only risking £245. So it was a nice risk reward, even though I didn't get out at the top of around 4 to 1. So if you have a 4 to 1 risk reward, you don't need to be right very often. If you're right only 20% of the time, you break even. Anything more than 1 in 5 success rate, you'll be making money. As I said, another nice attribute of CFDs is the ability to go short. So this was a setup I saw last week. We had what's seen as a false breakout, or was possibly a false breakout, and a doji candlestick. It's not the strongest reversal signal, but given such a big uptrend we'd had and such a large move higher, I believe this could offer an opportunity to short. As you see here, this was the previous high. We had a false breakout above it, and then I saw we'd come down and we were testing this level here, 4182. This had acted as resistance, break through here, and then it had acted on support on a couple of occasions. So I was looking for a break back down below 4182, that flip in polarity again, and then believe this could become resistance and look for further declines. You can see, just quickly, this was a position I entered. It was coming on to the evening time and I was going home from the office, so I entered actually a pending order. You can see here I had a sell stop at 4175 and also had a sell stop loss attached to that. So what that essentially means is if this triggers and I'm entered short, then I'll have a stop loss at 4310, which I believe was just above this resistance level here. See here we had a nice strong move down lower. We took 4182, fell through. My order executed, entered into a short position in the market. From here, you can see as we've fallen down below there, we fell down all the way to this previous low at 3810, and then we made another break lower. Oh no, sorry, got that wrong. This was where the trade was executed, where we entered. We fell down and held around this level, 3978, and then we dropped lower again. I saw this as an opportunity to advance my stop in, so I moved my stop into just below, just above, I beg your pardon, 4,000, and basically guaranteeing locking a profit. The market fell down lower again, came down to almost 3,600, just below that, but then we did have quite a strong recovery and we bounced back, and when the price broke back up through here, my stop loss order was executed, which in this case was locking in a profit, and I took another profit from here to here. So that's just an example of basically how you can manage your trades and manage your exposure as it's going along, both long and short. And like I say, I'm not going to pretend that I'm always 100% right, or you always buy the low and sell the high. But if you do trade in a sort of systematic way like that, especially if you had risk rewards as I highlighted in the first one, or sort of 4 to 1, then it can provide very nice opportunities for trading. Just quickly here is fairly basic strategy you can use for trading Bitcoins, just using Fibonacci retracements. Obviously, as I said earlier, there's been a huge rally in these markets, and if you want to jump on board, any sort of retracement against the prevailing trend can offer nice buying opportunities. So if we take this move higher, so this was that gap higher that I talked about from below 3,000 through to 40, where I jumped in long here. If we take a fib retracement, sorry, from that low to the subsequent high, you can see we've got some pullbacks here. We have the 38.2% pullback, which was a buying opportunity, and then more recently we had the 50% pullback, which again was a buying opportunity. What I look for if we do come down to these levels is some sort of bullish price action. Here we have what's called a bullish hammer candlestick. Here we have the long wick below. And these would allow you to enter long positions for stop loss below the lows here or here. And then look for price to move back up in your favor. So this isn't all just about Bitcoin, this is Ethereum. So we've had an incredible rise in Ethereum this year, gone from next to nothing to over 400 US dollars. What I was looking for here was to move higher, and I was looking then at this large retracement we had and looking at fibs of this retracement. What I was actually looking for was a break above this 61.8 to enter into long positions. So this is the daily chart, and once we retrace more than 61.8% of the pullback itself, then quite often you'll see price continue the full 100 or even further. So you can see here we have this big breach through it. Monday of this week, I think, had volatile trade on Tuesday, to be fair, and it did actually briefly dip below there, but since then we've actually come back up and we're now settled above 61.8 the last 2 days, and we're looking on course to settle above 61.8 again, which could be seen as suggesting we have further upside in this market. Okay, so finally, I just want to talk about cryptocurrencies as a possible bubble. So with any market or any asset, when you have these sort of rapid increases in prices where you're getting parabolic and almost explosion to the upside, there is normally some sort of bubble talk surrounding that. And bubbles have been around for a long time. The first fairly well documented bubble, I believe, was in the 17th century, which is the Dutch tulip mania. Essentially what happened here was you had tulips which were fairly new to the Netherlands in the 1600s, and the Netherlands at times were one of the leading countries in the world, arguably the leading country in the world, and quite a big colonial power. In terms of guilders, you can see the price here from 1634 to 1637 of one tulip bulb went from below 2 guilders, I think around 1, peaked around 60 guilders. So we had this incredible rise in just over 2 years, from December 34 to February 5th, 1637, beg your pardon. We had this rapid rise, and it became almost a case of what I like to call the bigger fool theory. So I think when tulips were rising and rising, we're getting up to 10 or 15 or even 30, people started to realize this was a crazy over-the-top price for a tulip. Just put it in some perspective, Amsterdam was possibly the most expensive city in the world to live in at the time, and for 60 guilders you could buy a big nice townhouse in the center of Amsterdam. So for a tulip bulb to be comparable prices to a townhouse in the most expensive city in the world is incredible bubble. But if you were buying it at 10, people believe they could buy it at 10 and sell it at 15, or buy it at 30 and sell it at 45. And that's how this develops, and people rush in, and they see the price keep going higher, till all of a sudden people are realizing this has gone way too far, and then the bubble bursts and it falls all the way back down to next to nothing. So whilst that is whilst that is an example of a bubble, I think a more relevant comparison and analogy to cryptocurrencies is a dot-com bubble. So the dot-com bubble essentially came around from the start of the it came around from the invention of the internet, and people very quickly realizing that internet companies would revolutionize the world. It would change the way everything happened in the world, and it could be highly lucrative if you're in the right companies. This is a timeline from 95 to 2005 of the dot-com bubble, which occurred in the NASDAQ index. So that's the New York Stock Exchange and NASDAQ, the two main indexes, stock markets in North America. So you can see we began around April 96. Yahoo's stock price more than doubled on its first day as a public company. Very early on, Alan Greenspan, who was then Fed chair, warned there was an irrational exuberance in the market. This is a key attribute of bubbles. A lot of people realize that the price is running away from itself at the time and that valuations have become extremely stretched, but this doesn't mean that they can't continue to rise. When Greenspan made these comments, the NASDAQ was trading around 1,000. You can see it went on to rally to almost 5,000 in the next few years. So just because you believe something's unjustifiably high doesn't mean it can't keep going higher. In May, we had Amazon going public, $18 a share. There's since been subsequent share splits, so that would be equivalent now to 150, that IPO price, and it raised 31% on its first day. One of the key first real signs of sort of hysteria and animal spirits running wild was the stock of theglobe.com, which went public in November 98 and soared over 600% on the very first day of trading. We're getting similar things happening in what's called ICOs at the minute. So an IPO is an initial public offering when a stock first lists on the stock exchange. An ICO is an initial coin offering. So it's where coins are basically being created, cryptocurrency coins, and then offered out. And we're seeing incredible rises on the first day of a coin that no one's heard of. And it's got no real substance or even users to it yet, but people believe this could be the next Bitcoin, this could be the next Ethereum, this could be the next Ripple, and people are jumping in. So you need to be very careful. There is a lot of fraudulent activity around these ICOs, so if you do get approached, please bear that in mind, that it may not always be as legitimate as it sounds. December 98, an analyst says the Amazon stock then below $250 will hit 400 within a year. It does within a matter of weeks. So this has gone up from well, it was 18 when it listed to over 400 in just a year and a half, basically. And you can see we're getting crazy valuations. And the market really took off from sort of late 98 to its peak in March 2010, when the NASDAQ hit an all-time high, at the time an all-time high of 5,048. You can see then the bubble set, to use the analogy, burst, price fell back down, the globe.com was delisted in 2001, the stock closed at 16 cents. Remember, in November 98, it was up 600% the first day to $63. And the market tumbled, came crashing all the way back down to around 1,000. NASDAQ hit a bear market low of just over 1,000, and then you had the fallout coming after that. Former investment banker got 18 months for obstructing an IPO probe. Also saw Google go public later on. So that kind of timeline of what you can see happening when a bubble amounts. Now, whilst it's not just the ICOs and the IPOs where you're getting the analogies, between the NASDAQ and Bitcoin, it's also because of the similar prices. If you look here, we've seen, as I was saying, Bitcoin started the year around 1,000, it's now burst above 4,000. So it's bears more than a passing resemblance in that sense to the NASDAQ.com bubble. This is a chart basically of 4 bubbles previously. So it's the NASDAQ, it's got Bitcoin at the time, oil 2008 and peak oil, and also silver in the 80s. Now what this has looked at for all the other lines on this chart apart from Bitcoin, it's basically took the 2-year period during which the bubble burst. So it's looked at what the run up was during that time and then what the pullback was afterwards, with days along the bottom here and a scale on the left hand side which is indexed at 100. You can see, for instance, the NASDAQ rise comparative to Bitcoin in that space of time, and that time frame was actually relatively muted. You can see it only just over doubled in its final year when it went from around 2,500 to 5,000 before it popped back down. Oil 2008 took off very quickly, went just over 200%, but again, similar trajectory to NASDAQ before it fell back down lower. Silver in the 80s is, in terms of percentage-wise, similar. This was when the Hunt brothers tried to corner the market, and you had this huge spike as a shortage of silver, basically caused a huge spike in price, and then that obviously quickly fell back down again. So Bitcoin here, you can see in this comparison, is the biggest increase, but we don't actually know which point along the possible bubble we are, because all the others were plotted with hindsight. So this is NASDAQ against Bitcoin. So NASDAQ since 98 and Bitcoin since July 2015. We have the NASDAQ on the left-hand side scale and the blue chart. So you can see we rose up to just about 5,000 by March 2000, and then fell back down lower. You can see Bitcoin since July 2015 on the right-hand side scale rose from around 200, 300, as we currently are, up above 4,000. Again, you can see comparison-wise, this is actually took off more than the NASDAQ did back in 98. You saw what happened to NASDAQ afterwards, and there is some possibility we could see similar moves in Bitcoin. Just one final thing I want to leave you with before see if we have any questions, is if we do look back at this, all bubbles have had previously some sort of economic rationale behind it, really, apart from the tulip bubble that I can think of. And whilst the NASDAQ bubble here hit 5,000 and then burst afterwards, anyone who still follows the NASDAQ will know recently it's gone back above this peak. It currently went just shy of 6,000 in the past couple of months. Looking at individual companies here, Amazon, for instance, which listed back then and had the huge increase and then fell back down. Amazon briefly went through $1,000 a share, and when you take into account the share split since then, that's even more incredible, really. On the afternoon when Jeff Bezos was the world's richest man, I think, for a few hours before their earnings results came out and the stock fell back down lower. Just on the bottom right of this scale, we've got Google going public in August 2004 when the NASDAQ was below 2,000. Google now is one of the main leading stocks, not just in the NASDAQ, but in the S&P 500. And a lot of the rise we've seen in the past year in the S&P 500, which enjoyed strong move higher, has actually been coming from tech stocks, the so-called FANG stocks, with Facebook, Amazon, Netflix, and Google or Alphabet all leading the rally forward. So what this happened, so what I'm trying to get to the point of saying really is, just because something's a bubble and then it bursts, it doesn't mean that longer term it won't be a success. So cryptocurrencies, Bitcoin in particular, could continue to rise. We could see another push higher. We could go 5,000, 7,500, 10,000 in the coming months or years. But at some point there will be a big pullback when the valuation gets too far ahead of itself. The question is, when we do have that big pullback, is that the end of the bubble, or is that just the low here we saw like in the NASDAQ around 2002? Before then, the blockchain technology and the innovation around it actually sees cryptocurrencies continue to eat into traditional currencies market share. So that's really the big question here. And from a trading point of view, even if you do believe the market is in a bubble, shorting it now without a stop loss could be a very dangerous strategy, because we could have this sort of growth you see here from December 99 to March 2000. So just a matter of 3 months really. You can see the market went from 3,500 to 4,000. If we go back a couple of months forward, in 6 months we probably saw the market double. When you have that sort of move, even if you're well aware this is a rational exuberance, as Greenspan said as early as this, being short without a stop loss here would be a very dangerous way to try and trade the market. By all means, try and look for reversal signals, as I did in that example earlier where I showed you a short example. But always realize, especially when using CFDs and leverage products, that you should have a stop loss and limited risk on your trade and your positioning. I think that's everything. There's my email address if anyone has any further questions around anything that I've talked about today. I'll look on the right hand side here. I can't see any questions. But,
Thank you. Sorry, it's Simon here. There are a few people waiting. We've still got about 3 or 4 minutes, if that's okay, just to see if we can address some of these questions.
Yeah, sure.
Okay, more questions starting to come in. Now let's start with a comment by Richard. He says, "Why are investors piling into crypto more than precious metal and diamonds? There's generally a nervousness induced by the media and the lax central bank policy these days." Well, I guess yes. I mean, this is a question from before you. I think you've explained very well the excitement about crypto.
Yeah, well, I think one thing there, in terms of precious metals, for instance, they're obviously not digital and easily transferable. So if you buy a certain amount of gold or diamonds or something like this, you can't send it instantly or pay with something in a shop or online for it. So the digitalization of it is obviously a major advantage over that. It arguably has no intrinsic value, unlike gold or diamonds. Along those lines, but as long as someone else believes there is value in it and it has a store of value in that sense, then people will accept it as a form of exchange.
Indeed. How does Bitcoin and cryptocurrencies fare on the AML anti-money laundering front? Anis asks.
I suppose it depends what perspective you look at it from. In terms of an anti-money launderer, they probably do a bit too well. It's very hard to track transactions in terms of the actual identities of the people involved. You can see where the money's moving, but you don't know where the money's coming from or where it's going to. So one of the main drivers of actual Bitcoin transactions, so here I'm not talking about speculators looking to buy or sell and take a position in the market, I'm talking about people who are actually transacting in Bitcoins. One of the big things for that is money laundering, as I said earlier. Drug trafficking, arms deals, these sort of things can be very popular to use a cryptocurrency because it is essentially offshore and it's very easy and anonymous way of transferring large sums of money.
Indeed, I remember the news headlines with people that got their computers hacked 3 or 4 months ago. You couldn't help but notice that the hackers were offering Bitcoin as the medium, the channel to
exactly.
pay the ransom. And he follows that up. He says, I guess the demand by the underworld and casinos due to the anonymity is driving up these prices. Financial authorities will finally ban these currencies. Well, that's interesting.
It's an interesting viewpoint. The only thing, it's hard to ban it because it's essentially offshore. So I'm not sure whose jurisdiction it falls under. So it's very difficult to stop people buying Bitcoin or selling Bitcoin. As far as I understand.
Third point, Anis makes, CFDs are the best choice for considering the risks in dealing in cryptos. Well, there we are. That's exactly what you've been at.
I think just one more thing on CFDs, which I didn't quite allude to, but the examples I was using there were more trading in and out of positions, even if you want to just buy crypto and sit on it. In terms of speed of opening an account and taking that position and also funding your account, it's probably quicker and easier, I think, to gain exposure, even if you're not looking to trade in and out and you're looking to just put a lump sum in, not even necessarily utilize the margin and just sit on it and sit in a long position in, say, Ripple or Ethereum or one of those.
Quick question on your trading strategy from Wayne. Do you always use a 4-to-1 risk reward?
I don't always use a 4-to-1 risk reward. It depends on how I feel about the SAP and how high conviction I have. I'd always really look for at least 2-to-1. If I got 3-to-1, I'd be happy. 4-to-1, even more so. Ideally, I like it if you can find 6, 7, 8-to-1 sort of risk reward ratios. But obviously, you have less opportunities that offer such a nice risk reward skew.
What other threats to Bitcoin would you identify compared to currencies and equities?
So in terms of Bitcoin specifically, I'd say the biggest threat to Bitcoin is other cryptocurrencies. As I show in that market share chart, whilst Bitcoin's gone up 4-fold this year, its market share has fallen by approximately half. in terms of the technology, it's my understanding that Bitcoin isn't actually any better. It fares worse in terms of speed and transaction volume than a lot of its peers. I think it was just kind of the forerunner. It's the most well known, so people have rushed into that, and it's got a lot more exposure. It wouldn't surprise me at all if in time Bitcoin ends up going along the lines of, say, a MySpace, and we have a Facebook equivalent in the crypto world, which would overtake it going forward.
Okay, Richard says because Bitcoin doesn't produce anything like the companies produce services in the real world, he says, is it not logical then for there not to be a severe crash at some point if the interest rate?
Bitcoin or any cryptocurrency is what you call a fool's asset in terms of it has no yield. So like fine wine or art or something like this, it's only what someone thinks it's worth and what someone's willing to pay you for it that it's actually the value. There's not an earnings or a yield like on a bond. I think there is a chance that there could be a big drop back, but like I said, in terms of the .com bubble, if we look at that, we could easily see Bitcoin double in price before we get a big pullback. There was actually a drop just as we started offering it in early July, where the market was down quite heavily over the weekend, and it dropped down to around $1,800, and since then it's more than doubled to move back above 4,000. So you can see at the minute the dips are being quite aggressively bought. Obviously, if that ceases to be the case, then we could get a big correction downwards.
Fantastic. By the way, Richard, thank you for these great questions. Really appreciate them.
Yeah, they're very good questions, to be fair.
We're going to have to move along. We have Ali Crooks standing by. But David, thank you so much for coming along and giving a very good presentation. Hassan, great presentation, great feedback. You've answered a lot of my questions on that hour. Which I had been searching for. We've had a few speakers on in the last few months, all good, talking about different aspects of cryptocurrency, but I don't think anybody's actually been able to encapsulate it and provide a very clear history of the currency, history of the asset, some of the risks and rewards, and the way to trade it. So you've done an excellent job. It's a very good presentation.
Thank you very much.
Really appreciate the time you've taken to do that.
No problem.
One final question might be worth answering. Does XTB offer guaranteed stop losses?
We don't offer guaranteed stop losses on cryptocurrencies at the moment. Like I said, we've only been offering them for around 2 months, so we're constantly trying to change it. At the minute, we only offer it 5 days, so FX hours from Sunday evening till Friday night. We're looking to, as soon as possible, offer it 7 days a week, and we'll also be looking to see if it is feasible to offer guaranteed stop losses on that as well.
Oh, that's great. Okay, there you go, Rich. So you need to keep an eye on those trades. David, thank you again for coming along and joining us. I'll put the link in the box for anybody that wants to go along, open up a demo account, test out the platform. But appreciate the time you've taken, and hopefully we'll hear from you in the future. Terrific.
Cheers, man. Thanks. Bye.